I'm here, just so you know.
Perfect. All right, we are recording and folks should have access to go ahead and join in. So we'll wait for folks to join as they come in. I'll kind of say good morning and welcome. I'll put something in the chat real quick. All right, good morning, everyone. Thank you for joining us today for our first session of QuickBooks. It is 9:30 on the dot, so we'll go ahead and begin our session. We are recording today, so just know that you will have access to the recording of today's session after the fact, available on our online classroom, which we'll give you a link to. If you have questions, please use the Q&A box or raise your hand and use that function. We'll allow you to speak and interact and have a good session here with Zoran. I'll allow Zoran to introduce himself, but he is a certified public accountant, and he's also an expert in QuickBooks. He's done QuickBooks workshops with us for the Jacksonville Women's Business Center in the past, and he's an expert and amazing. He makes it really easy to understand. Today, we're going to be focusing on the desktop version of QuickBooks. So just know that that is the focus of today's session. And then next week, we'll dive a little bit into the online version, as well as any other questions that maybe come from today that we need more clarification from. So thank you all for being here. I'll turn it over to Zoran and take it away.
Well, thank you, Jackie. Good morning, everyone. Once again, I'm Zoran, and I'm a QuickBooks Pro Advisor, which is a person actually who has extensive knowledge in a QuickBooks. Personally, been working in a QuickBooks for over 12 years, and also I'm an accountant. One of accountants actually over here at our bookkeepers. Just give me 1 second. I think actually I'm getting something coming to my way. Just give me 1 second. I'm not sure from whose side actually this is coming from. I'm having actually a rings coming in. Do you guys hear it?
Yeah, I do hear it.
Just give me 1 second. I just want to see actually if there was something on my end or your end. Let's see if it is going to stop. Apparently it did stop. Okay. So anyway, so today's session actually going to be about a QuickBooks Desktop. Jackie also said that next week, for those of you that are going to be participating in the same session, we will have a session in regards to QuickBooks Online, and also during the time between now and then, if y'all would have any particular specific question, you're more than welcome actually to ask me during the session, or also you can reach me through our office number, which is 904-425-1238. I'll repeat this number and those informations actually a couple more times through the session, just in case if you have any additional questions, I don't mind actually supporting you with it. So we're gonna go ahead and begin with the QuickBooks Desktop. Regardless, actually, there's several versions or several versions actually throughout the years of the QuickBooks. So the version that we are on today is a 2019. The latest version is a version 2021. Just so you know, all those versions actually, they're just getting upgraded without different layout. As a matter of fact, they do add actually a couple of features, you know, that would be relevant to extensive use of the QuickBooks, but for this training, regardless of the version, you know, we want to actually go ahead and learn the basics, and hopefully those basics actually can, you know, remain with you. So therefore, they will help you out to make a decision whether you want to go ahead and invest into desktop version, which is market value less than a couple of $100, and there's no additional subscription, monthly subscription, or anything of that nature. What I have on a QuickBooks Online, there is a monthly subscription, and I believe most extensive part of that version with the full features, it's somewhere in the range between $50 and $70 a month. So before you guys decide which way you want to go, I like to start with the desktop presentation, and then in a later time to introduce you actually to online. The good thing about the desktop version that I'm going to be taking you step by step as far as how to set up actually your profile, your business profile with desktop version. Another benefit actually with the desktop version is that at any point of time, if you don't like it, you can actually go ahead and convert this to online version. But if you start with the online version, you cannot technically go back and downgrade actually to the desktop version just because you didn't like it. So what I'm going to do right now is I'm going to go ahead and starting up actually, if any of you have any of those desktop versions before or had opportunity to see it, I'm going to actually just go ahead and kind of explain to you how to set up actually your company. So once again, we're going actually to create a new company, as you can see actually over here. And you can actually do Express Start. The Express Start actually requires you to fill out your business name, which I'm going to just call for the purpose of this visit, for the purpose of this session, I'm going to call it ABC Inc. Now, relevant industry that you're in is kind of beneficial because it pre-assigns, the QuickBooks actually pre-assigns, chart of accounts, which is pretty much, as far as your income and expenses, some of the asset account that is basically relevant to the balance sheet. And we will go actually a little bit deeper into that area as we continue the setup. So let's say that in this particular example, some of you might be in a construction as far as, being a general contractors or construction trade. Remember, all of this that I'm pointing actually right now is for those of you that provide a service. The service actually, as far as, some of you might be attorneys, some of you actually would be the hairstylist, some of you actually would be consultants as well, would be in construction. However, some of you also might be in an industry actually that has actually inventory, which would be, for example, the retail stores. So whichever you choose up in here, whether you're going to actually choose a retail shop, you're going to use actually construction or even consulting as an example given. Professional consulting, it's going to be just irrelevant, whether you have an inventory or no inventory, and there will be certain terminology used on a chart of accounts that would be sort of a proprietary for that particular industry. So I'm going to actually just go ahead and start, with the construction of a general contractor, just as an example. This part that is irrelevant for something as far as which business type actually are you. This is something that we can even discuss in some later time as far as next week or even during this session. If you have a question, I will be happy to answer it, or you can just reach me through 904-425-1238 and I can help you about it. Or you can just say, like I said, you can consult your accountant and find out what is the structure of your business. So some of you actually would be a solo proprietors, which is a common for a single member LLC, which is again relevant, to prepare your taxes and to prepare your Schedule C on your personal return. Some of you may have a LLC that has a multi-members in it, which is more than one person. So an example given, by default, if you're a multi-member LLC, by default, you will be considered a partnership. Again, all of this is just irrelevant to the chart of accounts that the QuickBooks will pre-assign to you by the default. You're not going to make a mistake if you select one versus another. It's just basically going to be easier if you properly select what is your business entity structure. So let's assume, the general contractor actually is S corporation. At the same time, all of you for your respective businesses probably have a federal tax ID that I'm just going to enter in here. Just as a default, and all of you actually wanted to go ahead and set up your own telephone number, which at this point I'm just going to use our office number. And then you want to enter actually your business address, which I'm going to use our address just for the purpose of conversation. And then obviously you want to put actually the city with your zip code and the state. Now you're going to create a company, and as you create a company, it's just going to create actually a file that will be saved on your particular desktop. This is not a version that would be basically getting backed up online unless you initiate it. Unless you actually initiate a cloud backup, the backup actually not going to happen to itself. Downfall of having a desktop version is that if your computer would crash, basically you would not have opportunity to retrieve your information likely unless you did have some sort of a backup actually process, during actually using your QuickBooks Desktop. Now, on top of this, I'm going to go ahead and set up actually and explain to you how to set up actually the client chart of accounts and how to add up actually your own bank. Usually when you set up your QuickBooks Desktop business information, the first screen that it's going to pop up actually it's going to be get your details, in a QuickBooks. If by any chance actually this screen disappears, which is not a big deal, you can always actually retrieve it going to the list and actually getting to the chart of accounts, which is basically pretty much, one of the shortcuts that you can use to add additional accounts to your list, such as a bank account, or even actually adding up some of income and expense account or something that would be relevant to asset and liability. So I'm going to actually just show this to you right now, the way how it looked like. So as you can see, some of accounts that I was telling you that is a proprietary to the industry of the general contractors are already set. So as an example, for the income is considered actually a construction income. Now, as you all know, whatever type of business you do, and let's actually stay focused on a construction, that some of expenses are considered cost of goods sold. In fact, that is an expense as well, but again, it's considered actually cost of goods sold, and that's pretty much actually really what is associated with business activity and a business income that is coming actually your way. So the common actually expenses related to it going to be the blueprint reproduction or equipment rental for the job, subcontractor expenses, and of course, you're going to have construction material. Those are the very few that each one of you going to basically have in event actually that you're in a construction industry. Now, of course, if you were an attorney, as an example, you would have pretty much, let's say, the common example with you guys in that particular industry, or if you're an engineer, in a professional consulting, sometimes, you would hire another attorney because that another attorney, for example, is in a different county, or he might be even in your county, but just because of the physical location, you're going to go ahead and say, hey, can you appear, do initial appearance in regards to the case, as an example, or another attorney actually going to work together with you on this particular case. So therefore, they would be considered actually as your as part of your cost of goods, or as your subcontractor. Sometimes accountants actually go out there and they make a call and they said, well, they would be more like an outside service, and they would be considered as an expense. Well, either way, they could be called subcontractor or outside service. Subcontractor as in part of your cost of goods, or outside service actually as your expense. The difference is that for the subcontractor, you do issue 1099, and for outside services, actually, you kind of don't. And then again, I would advise you actually just to talk to your tax accountant, or if you have any further questions, I'll be happy to answer those to you. Now, on top of that, basically, for those of you that have an inventory, okay, for example, those of you that run retail stores, which would be also a common part, you would actually also have something that would be relevant, to the merchants. Merchant purchased, for the resale, and that's how would you name actually one of your accounts up in here. Now, when it comes actually to the expenses, pretty much you can go to the detail of the list. As an example, you can actually create insurance, and then as an example, if you wanted to create additional sub-account to it, or even if you want to create a new account, as an example, I'm going to call this account actually auto insurance, as an example. So it's going to be the type of account going to be expense. Just give me 1 second. Just want to actually move this. Oh, I think I have. I'm trying to move this. All right, so the account actually going to be, as an example, insurance. It's going to be relevant to the auto. So as an example, you can actually have this to be standalone account, which I will show you what that means. Or if you feel like that your list is kind of getting too long, but you just want to keep all insurances actually under one another, then you're going to create insurance as a main account, and then obviously everything below it, every sub account would be auto insurance, workers' comp insurance, general liability insurance, or any type of insurance that is relevant to your business. I do not necessarily, I do actually also put, for those of you that have a group benefits, health insurance actually also would be listed as a health insurance, whether you want to keep it under insurance expense or as a sub account of insurance expense, or you want to keep it as a standalone. For those of you that provide actually different type of benefits, such as a retirement benefit or any type of other benefits, you can always actually create account of a benefits, and you can itemize it. You can call it a pension benefit. As an example, you can also, under the CARE Act of 2020, those of you actually probably know this or may have heard from your accountant, some of you might be eligible to provide up to $5,250 towards a student loan for your employees. In regards to yourself, there are certain stipulations and certain limitations. And obviously, you can actually check that with your tax accountant, but I'm just trying to give you an idea that you can create a benefit account, and you can actually itemize, whichever benefit you're providing in accordance with the tax law that they're permissible, you can put it actually in here. And again, that's gonna give you opportunity to trace and see exactly what is basically going on as far as expenses. Now, I'm going to actually go ahead and just show you one more time how to initiate or how to create a new account within a chart of accounts. Remember, when you create a chart of accounts, that's going to technically help you out later on down the road. It's going to help you out to properly code your respectful expenses or account for whatever income or certain liabilities or assets you may have. So once again, you go into the list, chart of accounts. You're going to go ahead and create new. You're going to decide if this is going to be income, expense, or any of those that we basically have listed in here. So as an example, I'm going to use actually, this time I'm going to use asset account, which is irrelevant to the bank. That's going to be something that you're going to have to set up as you start using a QuickBooks, regardless of which version you do so, desktop or online. So as an example, I'm going to use abbreviation for Wells Fargo, just as an example. So I'm going to use actually first 2 letters of Wells Fargo, and then I'm going to put the last 4 digits of account. This is extremely important that you do differentiate those with account number, because in accounting, everything is pretty much about the numbers. And entire office where I really work is actually using a feature differentiating accounts with the number. And if you do that, you can even put actually, this is an operating account as an example, which some of you actually put the nickname to it. But it's extremely important that you put the 2 letters or 3 letters or abbreviation for relevant bank, the nickname that you gave it to it, and definitely that you put last 4 digits of account, because it's going to help you and anyone else who's going to be working on your books, such as your tax accountant, to understand exactly what are the appropriate assets identified in your business. Now, the good thing actually about this is that the QuickBooks has opportunity to integrate with a major banks such as a Bank of America, Community First, Wells Fargo. Most of those banks actually that some of you actually do use. In fact, actually, I don't even know a single bank that does not integrate with a QuickBooks throughout the time that I've been working in a QuickBooks. So the benefit of that is that with a one single click, you can export a transaction, relevant to what is going on your bank account or your credit card account. And then as that actually gets exported, it will be sitting in exporting window, and then you're required to basically go ahead and code that. So as an example, transactions actually going to come in a format of a date. they're going to come in a format of the payee, and they're going to come in a format actually of having a memo relevant to that, whatever is really listed on your statement along actually with amount on transaction. Now, your job actually is to confirm the payee. So as an example, let's assume the payee was a Home Depot. So you're going to actually go ahead and say, fine, this is going to be Home Depot, and then it's going to be construction material purchase, which is a basically top of account. It's going to be cost of goods. Or for example, you all going to go to the gate gas station, and you're going to say that there will be auto expense, or if you like it to call it a fuel, but you know, whichever you do, it's not really bad because again, you know, it's irrelevant actually to fuel expenses. And that's really how do you set up actually a chart of accounts related to the QuickBooks Desktop. Now, I will be using some of those accounts, as well as I'm going to be showing to you the item list through this setup, and I will show to you how in a practical way you're going to be using each one of those. Before I actually continue, did any of you have any questions? Perfect. So what I'm going to do next is I'm going to explain to you the meaning of the item list, okay? The item actually list, again, it got actually preset, you know, by the QuickBooks, and I will show to you, you know, how to modify some of those or how to create actually additional item. So just so you understand what the item list actually really means. So in example, when you go in, and I'm going to just exit this screen just for a brief moment so I can show you in practice what an item list actually really means. So each one of us basically going to go ahead and create an estimate or an invoice, right? So whichever we do, if we do create an estimate, it's called really a business proposal, which the moment actually that is accepted by our customers and our clients, it gets actually converted to the invoice. Or if you don't even give them a proposal, you can actually just go ahead and create an invoice for the work that you're going to provide. So as an example, you're going to go to the create an invoice, and then it's just really showing the quantity of item. So as an example, you're going to say, I'm going to actually go ahead and do some masonry work, right? Which is going to be costing actually it's going to cost actually $1,500, okay? Which at that point, you're going to have to set up actually the new name and who is the billing responsible person, which I will go back to it. But again, the reason why I'm actually over here on the invoice screen, just to show you actually what the item list actually really means. It really is about the terminology that you wanted to use for line of your work as you're creating actually invoices and estimates, your business proposal and invoices essentially to your clients, as actually those going to be affecting your income statement sheet. So I'm going to actually go back to the item list and show you the relationship and how to create actually those. So let's actually, yes, ma'am.
I see a question in the chat that I just wanted to make sure we approach.
My apology.
No, that's okay. That's why I just wanted to do, I'll make sure.
I'm glad you should say something. Where is the chat?
So it says, please explain the cost of goods sold. And I'll help you keep track of those Q&A.
Sure. Excellent. So as far as the cost of goods sold, so let's actually, what industry actually the person is in? Jackie, if you can just ask them in what industry actually they're in particular.
Yep, he just typed in construction. Okay,
there we go. So so let's actually put it this way, okay? So let's say you're hired by the homeowner to install the floor, just as an example. Obviously, you installing the floor in a personal residence, not going to require per se, not going to require actually any sort of city license or or a state license actually. I'm sorry, the permit. I meant to say it won't actually require any sort of the permitting for that particular work of the home residence. Now, when you go out there and you purchase, and you're going to charge for the job $10,000, an example given. When you go out there and you purchase material going to cost you, an example given, $4,000. So that would be your cost of goods. How much did it cost you actually to do the job? Now, that's really relevant to the activity that you provide. On top of that, you may actually going to outsource the job because you may not going to do it actually yourself. So therefore, you're going to hire a contractor, which you're basically going to call a subcontractor, right? And you're going to pay him, as an example, you're going to pay him $3,000 actually to go ahead and complete the job. So now you have $10,000 of an income. You got $5,000 actually that is irrelevant to material purchase, which is a cost of goods. And then you have $3,000 that you pay to a subcontractor who will be receiving 1099 at the end of the year. And then obviously he's also cost of your goods. So your ultimately income minus cost of goods going to give you a gross profit, which means the gross profit before other expenses basically going to be $2,000. Now your additional, and I will show you actually right in here, I'm going to open up that chart of accounts so you can actually visually see it. So it's going to be, our income is at 10,000, our material is at 5,000, and our subcontractor is at 3,000. So our gross profit going to be 2,000. Obviously, all your overheads as far as a running operation gonna be, some auto expenses, some advertising, bank charges, so on and so forth. So in a nutshell, actually, that's really what's gonna be allocated to your cost of goods. And that's actually really what it means in your particular example. We're gonna go back actually to the item list. And again, if there are any other questions, Jackie gonna let me know, because for whatever reason, I'm not receiving a pop-up actually on my end. But at the same time, going back actually to the item list, and again, I'm gonna actually connect this item list to the very first participant actually who raised the question, what is the relationship and what is the really meaning of the cost of goods? So once again, item list is really, imagine this actually is a list of your services, okay? It's just called the item list. That's the terminology that they use in, I guess, in accounting world. But technically, it's really a list of services that we provide. Some of us actually provide a consulting. Some of us actually, and in a consulting, as an example, if we would be in a consulting industry, we could be providing a legal advice, right? So this could be actually immigration. This could be actually a family law. This could be actually, bankruptcy. So what's going to really do for you, it's going to show you the revenue based on a list of services that you provide. In example given, you're going to be providing actually so much of the concrete services, masonry, and floor framing. But either way, actually, it's really a list of services to help you out to properly define and bill for the services that you have established. So as those that you can see in here, they're already preset by the QuickBooks, okay? So I'm just gonna actually edit them and I'm gonna show you the linkage so you understand where that really goes. If you remember, example that I gave as far as the flooring, right? The QuickBooks have pre-assigned that that's going to be subcontractor expenses, because there is a presumption that you will be actually subcontracting actually that job. So again, when money actually comes in, it's going to be actually shown as a construction income. But if the money actually goes out, okay, and you use a particular contractor in this assumption. So we're going to use actually, again, subcontractor, we're going to call him actually floor contractor. That's going to be his name. Now you can, or if you decide not to, you don't have to even have this as an option. But what's going to happen is you're going to say, I'm actually charging $100 per square foot as an example, and I'm going to be charging actually a subcontractor as I'm going to be paying to the subcontractor to do this job as an example, actually $70. Many of you not going to even use this, okay? So the only part that you need to use actually is account that is a pre-assigned. You don't have to use the cost because the cost actually that you're going to pay to somebody are going to vary because you may going to actually do it yourself, meaning with your own employees, so you'll be the one doing it. So therefore, this won't be necessary. But what is really necessary actually in this particular screen is to define the service and to define actually what type of account relevant to your income going to be going to. So if you decide to create account, let's say the sum of accounts are not listed in here, you're going to actually go there and you're going to basically select the new item. And you're going to say that you're providing a services, right? And let's say you, like I said, you could be actually even a consultant, you could be an attorney, you know, construction guy, it doesn't really matter. You're just going to call your service whatever the service is. So I'm going to call that service actually a family law, just as an example. Or you can call it actually, you know, a DUI cases, okay? And what's going to happen is that always that's going to become part of your income, right? So for those, just give me 1 second. Just 1 second. Just my apology, just 1 second. Just one brief second. I just want to take this phone up.
Hold tight, everybody, real quick. Sorry about that. I see the questions. Angel, I haven't forgotten about you, so I'll make sure we get that answered. And then Bailey, I see yours as well.
Apology, I guess my phone was interfering with us.
That's okay. Hey, Zoran, I've got 2 questions here.
Yes. Yes.
Did mileage to the job count for cost of goods?
No, that would be part, remember, that's going to be pretty much part of your expense. And that's something actually relevant, whether you're a solo proprietor or single member LLC solo proprietor, or you're basically part of the partnership or part actually of the S corporation. Basically, that's going to be auto expense.
Okay, and then next question, can you show us how to book a JE in QuickBooks, and where does the bill.com feed come in?
JA?
I see, I'm not sure what JE is. Bailey, if you can give us some.
A general entry?
Yeah, is that what you're referring to? Yeah.
Is that the general entry? Is that what you're talking about?
Yes.
Yes, I'm going to actually show you the general journal entry.
Okay, great.
Let me just actually finish the item list, and I will show you actually journal entry. And basically, that's going to be just so we understand. When you're doing your general journal, obviously you're crediting one side and debiting actually another side, which is basically you are adjusting, you're doing adjustment entries based actually on the figures that you have. So as an example, you're going to say, I'm going to enter that mileage because I'm going to go ahead and issue myself, as an example, a check, and I'm going to put it as on top of my shareholder distribution. I will show it to you how to do that and when the general journal actually is really used. What's the other question?
That's it. We're good.
All right, so for those of you that is really not in construction, just imagine that, let's say that this construction income, the construction income actually is not listed out there. So you're just gonna actually say, you know, you can call it actually attorney's fee. And you can actually set this up again, it has to be the income, okay? And the DUI now, if you actually bill it, it's going to be going to the attorney fee. I have misspelled attorney because I wrote attorney. Sorry about that. So what's going to happen is you can set up whichever account you want, even if you did not do it to the initial setup of a chart of accounts. You can always actually add new account for whatever you decide, and whatever you desire, you can actually do that. Okay. So now I'm going to go ahead and use chart of accounts, and I'm going to go ahead and use item list to basically explain to you after the setting this up properly, how that really gonna work in practical world, and then what type of financial statements you going to get. And obviously, once I do that, I will show you again how to use a general journal entry for any sort of adjustments that you're trying actually to do, and when you should use actually general journal in general. So I'm gonna actually get to the home screen, and this is pretty much where the all shortcuts are pretty much actually set. Everything that you have on a toolbar, pretty much, you know, what is a mostly and preferably used is sitting actually on this home screen. So as an example, there's a vendor screen, and the vendors are people that we are doing a business with. They could be actually our subcontractors, they could be our material suppliers, you know, our landlords and whatnot. They're considered vendors. Many of businesses use actually really this screen, because many of you actually do receive a certain bills. And when you receive a bill, you want to be in a position actually to go ahead and record a bill, so you can be reminded that this bill actually needs to be paid, so your cash flow actually could be calculated properly. So as an example, I'm going to enter the bill from a landlord, just making it up. It could be a landlord, it could be anybody, but I'm going to call it a landlord. And we're going to say that that bill was received as an example, you know, back in, I don't know, the 16th of November. And then if there is invoice number from a landlord, you want to actually enter that up in here. And then obviously you're going to enter actually whatever they're charging you as far as actually the rent or supplies, whatever is out there. So now you're going to put actually a due date. So let's say the due date actually is the 8th of this month. Now you remember when we were setting up a chart of accounts. So many of you are going to say, well, okay, so we understand it's a rent. And I guess would rent actually be income, or would it be expense? It would be an expense because the money is coming out. So you're going to actually put the rent in here. If the rent expense, as an example, wasn't in here, you don't have to go to the chart of accounts to set it up. So I'm just going to actually go ahead and say rent expense number 2, just so I can actually demonstrate how to do that. So again, if the rent wasn't there, all you basically do, you go all the way to the top and you say add new account. Again, is that an expense or the income that you're doing? Obviously, it is expense. So you're going to actually go ahead, hit continue, and then you're going to write whatever that expense is. Now, remember, as I was explaining to you earlier, that you do have an option to basically create a sub account. You get an opportunity to create main account and to create actually sub account as insurance. If you remember, I was saying that you can actually say insurance expense, and then you can itemize how much am I spending for the workman comp, general liability, auto. You can do the same thing. In example, you could have a multiple locations. So you can just call this, you know, 4220 Beach Boulevard. And you can actually, you can put this as a sub account of your rent expense, if that would be the case, if you have a multiple locations and you want to trace each location actually individually. But since we have rent expense already in here, we're just going to actually keep it, you know, just to be part actually of this particular bill that we are creating. Now, one very important thing that you guys can do, and what the QuickBooks Desktop actually really has, is something actually what they call attach file, which means that you can literally use the scanner that you have. It has to have a twine file. That's one of the drivers, I guess, that is a part of the software. And technically, what's going to happen is you can scan right in from your home scanner. You can actually scan right in that particular bill, so therefore it's never going to get lost. And the benefit of that is, you know, that many of you might be even AC contractors, right? And some of you might be even using actually this, in fact, you know, to bill your customers. So some of you do provide actually a certain warranty relevant to your work. So therefore, and it's so hard actually to go back and find it. So what you really want to do, even the invoice, any type of, any screen, it has this feature, whether you're issuing the checks, whether you're creating an invoice, whether you're doing an estimate, whether you're going actually under the vendor, has a feature that you can attach anything relevant to that particular transaction. And I will show you of that more as we actually go through. So right now, we have entered the bill, but obviously, as you can see, in a Wells Fargo, right on the right, we really have a zero balance out there. So technically, we're not really in a position to go ahead and pay any of the bills because obviously we don't have the money. So we're gonna go ahead and create the invoice for our work, and I'll take you to the process of collecting the money and depositing the money to the bank before we start paying any of the bills, because we want to do that first. So right now, before we move to the customers, I would like to show you one more thing in regards to the vendors. So as you have seen, we have initiated a bill that we have entered in enter bill screen, right? And then you can even search by the invoice if you decide to do that. You can search actually that bill as you would be entering actually the reference that is relevant to it, and it's going to automatically pop up. You can search that, you can search it actually by vendor. So every bill that you have relevant to this vendor going to pop up in a screen. Obviously, we have just a single bill, so therefore that's why the same bill is keep repeating over and over. And that's how you're going to be able to identify any attachments to this particular transaction that you may have in attached files, because it's going to have number of the documents, or it's going to go to the green color, which is going to show you that there are some documents in it. And as you open them up, those documents will be listed in here, so you can actually double click and open the PDF version. So now, next important thing related actually to the vendors is a vendor center, okay? So in a vendor center, in example, we're gonna say that this was your subcontractor, right? You all probably know that, especially in the construction industry, that you do need to have some proper documents, depending actually of your county or a state that you work in, but you do need to have a proper documents as far as the subcontractor that technically works for you, right? So what you basically want to do, you can actually go ahead and actually scan those documents, such as a W-9, proof of the workman comp insurance, proof of a general liability. You want to go ahead and scan them actually in here, right? And at that point, actually, if you ever get in an audit by Florida Department of Finances, I believe, who is in charge of workman comp compliance, and when they come to your site, they're going to say, okay, we have found a company that worked for you, and now we need actually all those information because we are conducting audit on you. So now if you're trying to catch up those documents in a later time, it's going to be a tough luck. So you want to actually go ahead and use the feature that you can actually preserve everything that was given to you by the subcontractor. You can preserve it in their file. And then if anything is needed, you just print it or you email it to whoever is actually in need of that. Each of those features, as far as attaching documents, is also available on a customer end, because the screen doesn't look any different than a vendor. It just basically, it's called different. It's called customer information. And that would be relevant that once we get to this screen, that would be relevant to those warranties or anything that is relevant to the customers that you're working with. For attorneys, actually, that would be, retainer agreement or, whatever agreement actually you create, you want to be in a position actually to go ahead and preserve that anyone can come in and retrieve it if it is basically needed. So if you go actually a little bit farther in regards to independent contractor that I was actually showing you about, in here, you're going to fill out the blanks, anything that is relevant to that particular contractor. The most importantly is that you wanted to initiate if the contractor is a 1099 eligible. Just so you know, the practice in our firm is that whoever receives any sort of payment and is considered independent contractor, regardless they have a business entity or the individual, we encourage our clients to go ahead and provide them 1099. Many of you are going to say, well, we provide a 1099 only to those actually that their first name and the last name. We never provide a 1099 to the businesses or to the business entities. We just actually encourage our clients because we consider actually that would be more detail of the record keeping, because in the event when you come to the audit, you really want to have as clean records as possible, because feds actually can Internal Revenue Service actually can always audit you, and more cleaner records you have, more organized records you have a better chance of walking away from that audit pretty much breaking it even, as opposed to be actually having some additional assessments, because they're going to tell you, oh, wait a minute now, you have issued the checks over $600, and technically now we think actually that there wasn't even your independent contractor, that could be actually your employee, and it could just go actually on and on. It could cost you actually thousands of dollars actually to get out of it. Same thing actually that you can get outed from a state of Florida, from Florida Reemployment Tax Agency, Department of Revenue, Tax Department, Reemployment Tax Department, and also you can get an audit from the Workers' Comp, which is a financial department of state of Florida. That's why this is a good practice to make sure that you preserve everyone's information in here, just in case if something would have happened. So now we're going to go back to customers. Before I go to the customers, did you have any questions in regards to the comments that I just made?
I have not seen any come through.
Excellent. So the next thing actually that is going to happen in here, so we're going to go ahead and create the invoice in regards to one of our first customers that we're going to create, because what we would like to essentially do is to create a positive number on our Wells Fargo operating account 1010, so we can go ahead and pay some of the bills and create some of expenses, so we can see how this is going to reflect us, relevant to our financial statement that will be created as a result of everything that we do. So I'm going to actually get in here and create the invoice. I'm going to call this customer. As you can see, it's pretty much the same screen as a vendor screen. It just says a new customer up in here. So we're going to call it actually Jennifer Smith. And then obviously we can go ahead and fill out all of those blanks, which I'm not going to be wasting the time of doing that. At the same time, if you want a pre-assigned account number, you may do so. QuickBooks actually lets you to integrate the merchant account, which means that your clients can pay you. They can pay you actually with a credit card, or they can pay you actually with the ACH. There will be merchant services that QuickBooks, known as an Intuit, actually provides. So you can actually have all of that information in here. In regards to the sales tax, as an example, for those of you that basically, let's say those of you actually that do commercial cleaning, okay? If you do commercial cleaning, you are required to charge the sales tax, okay? But at the same time, you might be actually providing a service, let's say, to some religious, religious institution, and they may gonna have, they may gonna have some sort of exemption. So you have to write actually the certificate of exemption that I have, because if the no certificate is available, usually state of Florida does audits relevant to the sales tax every 36 months for many of the businesses, or at least that's what I have experienced. And if those are not compliant, then they create assessment to you. So let's say that by religious institution, by their nature, would be a church, okay? But that doesn't mean necessarily that they have received all exemptions that they should have received, because those exemptions might be in a process, okay? And let's say you were providing a service to them for about a year. Year passed by, they decide actually to dissolve the church, as an example, And technically now there's nothing else in there. But your contract with them was $1,000 actually per month to go ahead and maintain this church. You did not collect the taxes. You thought this was a church with all appropriate exemption by the default because that was your assumption, but yet they were in a process of receiving documents that they never did. And meanwhile, they got dissolved. So now what's going to happen at the end of the year, that's going to be 12 months. Each month there was a $70 of the sales taxes that wasn't collected. If you do the math, that's going to be somewhere around $840. Long story short, 3 years after you get in an audit, and revenue officer from a state of Florida comes back to you and says, well, business owner, do you have exempt certificates in regards to this particular client? And you're going to explain that basically you do not, but they're no longer actually out there, conducting the business. And he's going to say, well, I'm really sorry, but we will have to assess you for $840 plus average of 50% penalty on that, which is additional $420. So you're going to be out for about $1,300 just because of that church. You will have to pay that out of pocket. Now, you're going to try to justify that you didn't know, and they're going to say, don't worry about it. We know that you didn't know, okay? You did not do that consciously. We believe you. Therefore, that's why no one actually going to press any charges against you. But the rule is you were required to collect taxes, sales taxes, which you didn't, and now it's going to come out of your pocket. And you can try to fight it, okay? You can try to fight it, but then imagine retaining attorney and considering the attorney's hour, you're going to just put yourself in the negative. So might as well actually just go ahead and pay it or create some sort of installment agreement. So because of that, whoever is in charge, whoever actually is of you, whoever actually has to be registered for the sales tax, please keep this in mind. This is extremely important. Keep that so later in business, you don't end up actually paying the penalties. At the same time, you're going to actually go ahead as you create actually a customer, and as you have done everything you were supposed to do, you're just going to go to the customer list as an example. Here she is, and you're going to actually attach all of the documents of the exemption, resale, or whatever it is. On this particular screen, wherever we actually creating this invoice, you want to go ahead and scan everything that is relevant to the job. So as an example, you're going to actually go ahead and scan your agreement. You're going to scan actually any warranty card that you may have, any drawing or whatever it is, because this is going to be just a proper record keeping relevant to it. So once again, I'm going to actually go ahead and create a quantity of one, for our plans that we're going to actually charge $250. I'm going to actually say, 15 squares as an example of concrete, just as an example, that we're going to charge actually that $100 per square as an example. Now the computer, as you can see, it's going to calculate a 1,500 because you put a quantity, right? And you can actually go over here and you can adjust the wording in the description anyhow you want it. And I'm going to actually just put one more. I'm going to see actually if there's a floor frame, floor coverings, so we're going to charge that $75. So now this particular client actually going to owe us $3,625. Obviously, since we are general contractors, we do not charge sales taxes, okay? But if we were actually a commercial cleaners, okay, then we would be required to charge the taxes related to the work, obviously with a different description, because this would be a janitorial cleaning, washing windows, washing carpet at that point of time. So I'm going to go ahead and basically save and close this particular invoice. But before I do that, just so you know, if we did set up actually the email for this particular customer, we can go ahead and email this immediately to the client. And then at the same time, they would receive a payment link and they would be given an option to pay this through via credit card or to pay this actually to the ACH, using actually their checking account. There are different fees associated obviously with it, but just so you know, the moment that you get paid, this invoice actually will be marked as unpaid. Otherwise, it will remain as an open. So I'm going to actually go ahead and save and close this invoice. Now, again, we still basically have balance of $0 on our account. Now we can go ahead and receive a payment in this process. So what's going to happen as far as us receiving the payment, you will type the customer. In this case, is a Jennifer Smith, right? And let's say Jennifer Smith decided to mail us a check, not necessarily actually to pay us electronically. That's why her invoice is available in here. And she's going to pay us actually in full. She's going to pay us by check. My encouragement to you is to write a check number that is given to you. And if you like, you can again scan the check and scan the note that you have received from a client, because it will remain in here, if that makes sense. It will remain in here. And now, since funds are received, we still basically have a $0 at our bank. So what else do we need to do? So imagine the QuickBooks actually tells you you received that and it's in your hand. But what needs to happen is you kind of need to deposit that. And you need to make a choice, where is it that you're going to deposit. You can have a multiple bank accounts, not just one. And therefore, that's why you need to create allocation where this is actually going to go. So as an example, you're going to actually select the check that you take into the bank. Now, remember, there's some part that I'm going to explain to you, which is called the reconciliation, which is pretty much a balancing your checkbook. You wanted to take to the bank. You wanted to deposit in a QuickBooks exactly what you take into the bank. So if you take into the bank a single deposit of $3,625, you want to select that. But if you take into the bank multiple deposits and you're depositing them individually, then you have to do same thing in a QuickBooks. You have to deposit that individually, unless you're doing a bulk, if that makes sense, which in this particular case, I will show you that it's going to pop up and it's going to say, for example, 10 checks. So you will select the checks that you're taking to the bank. And you're going to select the bank account that you're taking it to. You're going to select the date that is relevant to it. And you can actually save and close. Now, just so you know, even in here, you have opportunity to attach. So you can create a paper trail, whatever you have done. It doesn't cost you anything. As long as you have a printer, it's extremely good feature, because no matter what it happens 3 years from now, 4 years from now, you will be in a position to retrieve your information as opposed to be creating boxes, putting them in your garage, putting them in a storage, or creating actually a mess in your office. Basically, that is just not feasible anymore. So I'm going to actually go ahead and save and close, and now you see that officially we have a $3,625 on account. So I will just go very quick to go ahead and pay the bill that is irrelevant to whatever outstandings we have. And I'm going to create a few transactions that is related, to us spending money with the gas, spending money with the people with the vendors that they don't send us a bill, such as a Home Depot or whoever out there. But before I do so, do you have any questions?
Nothing's come through.
All right, so now we're gonna go ahead and pay the bill, okay? So again, we're paying our first bill that we have, and in here it's gonna tell you the due date, or you can actually say select all that they're due on or before December the 2nd. And do you see that no one is showing up, right? But if you actually say show me all bills, or show me the bills actually just as of the 8th, they're gonna actually get populated. So usually what I do, I create actually show me all bills, and many of you pay their bills, once a week, like every Friday or Monday, whichever it is, because you wanna create some sort of a habit So you can respect the cash flow depending how fast money is coming to your account and what the balance is on your bank account. You want to create actually a schedule. When is it that you're paying those bills? So essentially you don't end up actually in a default. You can pay your bills in full, or you can pay them actually in a portion. So as an example, let's assume that there is a reason why you don't want to pay this bill in a full. So you can actually, you can override and say, I'm going to pay only $500, okay? And you're gonna go ahead and print out the check. The check actually will be initiated immediately for printing. And in here, gonna tell you immediately, the balance gonna go to $3,125. So you see this, whatever amount I put, it's gonna get adjusted. So you can actually see how much can you really pay to whatever reason to one or multiple vendors. So I'm gonna go ahead, I'm gonna pay select the bill, and technically I would have printed out the check, obviously, if check actually was in a printer, but at the same time, this is the way actually how it's gonna appear, and therefore you will be just able to print out the check, whether it's a check voucher or a standard check or a wallet check, whichever you have that you could have actually possibly ordered. Once again, the software is less than $200, you know, for one-time fee that you pay with Intuit. And I think actually really, it really actually is right on the buck as far as what you're really getting in there. So as the check actually has been printed, I'm going to actually just to see, I'll show you how the check actually look like. So when you open up, when the check, if the check would have get printed, it would get printed on a pre-printed check. So therefore this one actually should have who is it that we're paying, the day that we're paying, amount that we're paying, and it's going to give you a reference, which is that invoice that we have received from a vendor and the date that we received this from a vendor. And it says what was the full balance, but technically what is it that we are paying? Just so you know, that would be listed on a printed paycheck. Now, we're going to go ahead and move forward to go ahead and enter actually a few transactions, few of expenses, so we can see how technically, how this is going to reflect our financial statement as far as a profit and loss in a balance sheet. So I'm going to go in and I'm just going to go ahead and manually code. I'm going to say that, just a second, that we went to Gate and we spent actually $50, $55.20 for fuel expenses, right? Then I'm going to say that on the second, we went to Home Depot and we spent $451.20. We spent actually on a construction material, which is a part of our cost, right? But in the meanwhile, I'm going to basically issue a check to my independent contractor who did actually the flooring job for me, just as an example. So again, I'm going to get actually in here to write checks, and I'm going to go ahead and issue a check to flooring contractor for $1,000 because I have a $2,600 on account. And I'm going to say print the paycheck number that would be relevant, you know, to whatever sequence actually I would have. And of course, you know, this person was my subcontractor. So I'm going to actually print out the check and it's going to tell me, can you enter your check number? So I'm going to enter the check number to be 123. Again, the check going to get printed. It's going to get actually to 123. And then you will see what the printout would look like, which is pretty much no different. It's going to give a name, but there's no invoice number because we never went through the invoice. We just decided to give $1,000 to our contractor for whatever job is. So my suggestion to you is always write in here, what is this in a reference to? You know, what job is irrelevant to it, which is Jennifer Smith's job, okay? And you're gonna say, 123 Main Street, paid in full, or part paid, or whatever it is that you want to write yourself as a memo. And obviously, you wanted to have a bill from your contractor if possible, and you wanted to go ahead and scan it if possible. So now, before I move to the financial statements, do you have any questions in regards to this?
I see two questions. What if you pay a credit card bill with multiple charges? Do you list the credit card company or do you list the individual charges?
So here's what we're gonna do. You do list actually individual charges, but I will show you how. So now we're gonna actually go ahead in here and we're gonna set up the credit card that will be called actually Chase Credit Card 2020. And I will use it throughout the conversation. What's the next question?
The next question is, can you repeat what you said about the checks and the $200? And for those of you on the call today too, just know this is recorded and you will have access after the fact. If things are moving a little fast, we will make sure you get that.
What did you say about, can you repeat that question about $200?
Yeah, so the question came in, it says, can you repeat what you said about the checks and the $200? Angel, if you want to put any more clarification in the chat.
I think actually it was a 500 when we wrote the part bill, if I'm not mistaken. Was it part bill that we paid? Let me see if I have wrote the 200 to anyone. Those are the transactions. So if this is going to help, just tell me what transaction is related to, so I will explain myself.
Okay, I'll wait for her to.
Sure.
Intuit has a product.
Intuit has a, oh, I see. Sorry about that. So the cost of QuickBooks Desktop, this version that I'm showing it to you, does not require annual subscription. Integrates with your bank for the 3 years with no problem. You don't have to renew the product, and it costs you actually less than $200 that you can purchase it, from Intuit website or Amazon or whatever. I think the product itself is a less than 200. I don't know exact price, but it's a less than 200. The product that we're gonna be reviewing on Tuesday, next week, gonna be to QuickBooks Online, which requires a monthly subscription. And the full feature subscription is somewhere between $50 to $70 a month. And for those of you that don't feel like it, actually that wanted to have it because you have not decided what is it that you wanted to do, I would encourage you to start with the desktop, and you can integrate that. You can convert the desktop to online if you decide to switch.
Awesome, thank you.
That's really what I meant. So now I'm going to actually go ahead and show you how to basically reconcile. Remember, you should not actually generate a financial statement to yourself unless your bank account and the credit cards are basically reconciled. But before we go to the reconciliation, okay, there was a question relevant to the credit card. If we use one or multiple, obviously I'm not going to set up a multiple credit cards. I'm just going to use a single credit card just to show you actually the concept. But then the same concept is applicable to all of those credit cards actually that we can possibly set up, as well as in multiple bank accounts. So the question was, when we write a check to multiple credit cards, do we just basically name them that we're paying actually those credit card to Chase, Bank of America, whoever we have them, or do we go in and enter actually each single transaction relevant to the credit card? So the answer actually is that you must enter each and every single relevant transactions to the credit card that is applicable to your business. Because technically what happens is when you start using the credit card, that becomes a liability, a liability that your company is required to pay whatever balance is on a credit card. But every expense on that credit card must be itemized. So I'm going to actually just use an example. So I'm going to actually use a Chase credit card, as you can see. I'm going to actually go ahead and say that I went I went actually to Lowe's, okay? No, I actually paid the JA bill with that credit card, if that makes sense. And I paid JA bill $111.01. And again, what was this for? Many of you are gonna say, well, it's a light bill. Well, you can write it a light bill and your accountant gonna correct it, but technically it's considered a utility. So it's nothing wrong if you create your own chart of accounts, you call it a light bill, because I would call it too, if I was actually in the shoes of many of yours. It's just that accountants actually, in accounting industry, they use actually proper terminology. They call it the utilities. So while some of you actually owe the restaurants, so you can actually create as an example, and you can say electric. And you're gonna actually create a sub-account of a utility because you wanted to see how much you pay for electric versus how much you pay actually for your gas, if that makes sense. And you're gonna actually say record. Some of you are gonna use the credit card actually to pay a copy machine as far as the leasing equipment, or to pay actually, that would be relevant to the attorneys, engineers, and whatnot. Some of you actually have a restaurants, you know, you guys gonna have a dishwasher machine that you do not owe for a variety of the reasons, but you're leasing it. So let's say actually we're gonna call the vendor leasing company. And you're gonna say that you paid it $112 because you never received the bill. So now you're gonna say, well, it's a leasing, right? But it's not there. So it would be equipment rental. I'm not really sure. You know what I'm gonna do? I'm just gonna call it a leasing, meaning that one of you actually that is basically entering this, you may gonna say, I'm not really sure what it is, but I know it's expense. So I'll let my accountant to decide what it is to properly code it, but you at least name that. So you're gonna actually say it was a leasing, and obviously you wanna write some of the information, if possible, related to it. In fact, I would actually double click on the transaction. I would have scanned a bill, because remember, here's what's gonna happen. Just so you know, guys, very many times actually I do assist my clients with a sales tax audit, right? And one of the questions actually would be, did you or did you not pay the sales taxes on it? Well, we had people actually to clean our carpet, okay? Did you pay taxes on it? Well, why would I pay taxes? Because, you know, it should be actually a client paying for it. No, it's you. You need to pay the sales taxes to the person who came to clean your carpet because you're considered a commercial property. But then you're gonna say, well, he just told me $500. It doesn't work like that. State of Florida has something what they call use tax, okay? So technically, if you go on Amazon and you purchase, you know, a rim of papers or a cartridge or whatever, you need to pay taxes on it. If you were not charged to the Amazon or eBay account and you running a restaurant or commercial cleaning, that means that you were required to pay those taxes. So you go ahead and you remit that as a part of your use tax. For more details on this, you can consult your accountant, you know, or the person that you trust, or you can call our office. We'll be happy actually to kind of help you out in regards to it. Or you can simply just dial Florida Department of Revenue and say, hey, those are the scenarios. Are we required or not? If you are registered to collect the sales taxes. Now, if you're a commercial cleaner and you don't register for collecting sales taxes and you get actually checked by the Department of Revenue, there's a mandatory penalty of $5,000 because you were not registered. So just, you know, those of you that are required to deal with the sales tax, you know, make sure that you explore the topic, you know, with your trusted advisor or calling Department of Revenue. So once again, this is a usage of the credit card, right? So now the question was, well, I have a balance on this credit card or multiple credit cards. So what am I do next, right? Well, you do next, actually, you're gonna go ahead and pay the bill, right? Which basically gonna be the moment that you reconcile those accounts, you can actually go ahead and make a payment to it. So as an example, you can actually say that today, you decided actually to pay to Chase. Just as an example, you decided to pay $200, which was a minimum payment. Now, account that you need to select is a Chase credit card, because you do not create expense, you pay in the liability. Here's what's going to happen now. With your Wells Fargo, you're going to have a balance of $1,400, but with a credit card, you're going to have a balance of $23 because you went in and you paid the liability. Now, I will show you on a financial statement. Actually how this is going to be reflected. But before I do that, I just want to make sure that I did answer that question, that this actually did make a sense.
Thank you, Zoran. I'll wait for him to get back with that.
Okay,
And
no
we had another question.
Yes, go ahead.
What about Square fees? How do we account for this with payments from clients?
So what's going to happen is, remember, there are many, they're considered actually a merchant services, right? So the merchant services actually would, there would be a time that they would deposit $1,000, okay? Which would be actually pretty much, as an example, they would deposit $3,625. Remember, this came in as in check payment, but it could have actually come in as in coming from a Square. But then the same day, actually the Square would actually charge 2.5%. So let's just assume that would be $72.20, right? At that point, you're gonna say that's a merchant fee, which is your expense. And I'm gonna enter that as well, because the charge actually in many cases would come actually as being separate. Now, when we go to the profit and loss, right? Here is what's gonna be shown on a profit and loss. That we made actually, just give me 1 second. I just want to change the date on this one so it would not create a problem. Just 1 second. So as an example, let's assume that our bank account and credit card account was reconciled, right? So once again, here's the $3,625. That's how much of income we had for the past couple of days. Our material cost us $451, contractor, and so on and so forth. But now we're kind of confused. We would like to know the details because this is a summary, right? You can get the details clicking actually in the net income, and you can get the details actually top to the bottom, or you can simply click and see who is it actually under our income. So as an example, as you can see, it's Jennifer Smith. As we click on it, we have everything relevant to her, everything that we have done. If we want to do the same thing for a construction cost, it says that we went to Home Depot and we paid it with Wells Fargo operating account. Just did it 2 dates. We paid it actually with the Wells Fargo operating account. Same thing gonna happen with a subcontractor. And then if we go down to the total expenses, you're going to see that we pay this with a Chase account, which was a leasing equipment that we basically paid $112. Gate station and everything that is irrelevant to those respectful categories. So therefore, it shows us actually that we have a net income of so much. Now, this bottom will determine what your personal tax, what your business or personal tax liability going to be. It's extremely recommendable that you do actually review this every 3 months, and you talk to your trusted advisor and say, what my tax liability going to be? I have experienced many cases that clients would come back to me and they would say, you know, last year I was with this tax accountant. She told me that there was a $78,000 profit, and now I needed to pay $25,000 in taxes. I'm not quite sure that she knew what she was doing, okay? It's a very common. And the reason why business owner actually gets that perception is because accountants really are not very communicative individuals. Of course, you know, I'm an exception because I do pride myself on communication. And I do pride myself actually explaining this to every single client that I have. So remember, depending actually of your business structure, tax structure, and then planning that you do throughout the year, you will have a better understanding what is the liability that is coming to your way, because we all use the same tax table. So an example, if you're self-employed, okay, you have a single member LLC and you had $50,000 in a profit, and that's basically what's going to happen at the end of the year. You're going to pay 16% of the self-employment taxes, which is pretty much $8,000. And then depending actually if you're single or married or whatnot, you're going to pay whatever your tax bracket is on it. So really, that's the way how to really explain this liability. So therefore, you need to plan this every 3 months. You have to review your financials, and you need to see where is it that you need to improve as far as a business operation to save money, and then yet to understand what your coming tax liability going to be. Now, before I move to the balance sheet to explain you the asset sheet, did you have any questions in regards to what I just said?
Just one question about you repeating your phone number, and I'll type it in the chat too.
Yes.
Also,
Yes.
you know, I know a couple people might log off a few minutes early. You're going to have access to an online classroom. I put that link real quick in the chat. You're also going to get a follow-up email from me. So just know that you'll have access. It'll take a few hours to get you uploaded in there with a password, because I'll need to put the recording of the session after it's downloaded. So just know by the end of today or tomorrow morning, you'll have a link with access and to today's recording. And if you want to go ahead and say your phone number, Zoran, I'll go ahead and type it in.
Yes, ma'am. So it's going to be once again 904-425-1238. And you can also check us online, just pretty much typing our bookkeepers. And then, you know, I think actually right here, I'll show you this. I have it in here. Basically, it's just gonna pop up. It's gonna pop up actually where our location is, our website, how to schedule an appointment, and pretty much, you know, all of that.
Awesome. Yes. And if anybody, you know, if you have questions after today's session, maybe something came up later on today and you really wish you got that question answered, feel free to email me. I'll get that over to Zoran, or, you know, make sure you log on to next week's session.
Yeah, you can just actually give us a call. Just identify yourself, you know, that you're coming actually with the Business Center, Women's Business Center, and I'll be happy to answer the question, you know, just as a part of what we are doing, because my personal goal is not to convert you all individually to become an accountant. My personal actually goal in every of those sessions actually is to teach you pretty much, or present you actually with the tools that you have in front of you and how to read and navigate through those. It's extremely hard, you know, to learn the QuickBooks, you know, or any of those programs, especially accounting related, you know, in any session of 2 hours, but you are responsible to understand your liabilities, to understand how to read your financial statement, to understand importance of your income statement and the balance sheet, to understand importance actually about following the rules if you're hiring independent contractors or if you have a certain obligations towards the sales taxes and things of that nature. That's really what is the goal that you basically essentially get out of this. Now I'm going to actually go ahead and just create the one more bill, because I promised that I'm going to do general journal entry, so you can actually see what that really means. Usually general journal entry is actually used at a time when you wanted to adjust the balance on account, okay? So let's just say that we're going to be adjusting $52.20, right? So you're going to go actually to company and you're going to say make a general journal, right? Which means I would like to have this amount of $55.20 to disappear, because it should not be part of my expense, because this was something my personal. The easiest way before you even do a general journal is to click on it and then basically use a different account, which would be, this was my personal expense, in example given. As an example, I'm going to actually just use a Victoria's Secret so I could be more specific. So So we all know that Victoria's Secret purchase wouldn't be considered a uniform, right? At least not in the cases that I'm explaining, right? So let's say by mistake, one of you actually went out there and created actually Victoria's Secret as an expense and called it a uniform just by mistake, okay? So now you have quite a few of those mistakes because you went to Dillard's, you went to Old Navy and whatnot, and somebody told you that you can go ahead and kind of write off anything actually as a uniform. Well, technically, definition of the uniform, if you check with your tax advisor or if you Google it online, going to be very specific. So for example, registered nurse gown is a uniform, but what I'm wearing today, it's not a uniform. And why is it not uniform? Because I'm not differentiating myself. If I would be in a public place, I'm not differentiating myself with a cook or a registered nurse or a physician. But the printing on my shirt, if I have had one, would be actually considered a printing expense. But this shirt not necessarily going to be considered as a uniform, because if you do get an audit, Internal Revenue Service is going to argue with you, going to say, I'm sorry, but we will have to disallow that. That would be just one of the things. So one of those things actually, let's say, was a Victoria's Secret or Old Navy or whatnot. So you can double click on it and you can actually say, okay, that's going to be part of my shareholder distribution, right? And at that point, that's going to disappear. However, if there will be a multiple transactions and you just feel kind of you don't want to actually really do it, you don't want to actually go through every one of them, you're going to use actually general journal entry to go ahead and create adjustments that would be relevant to something that you're trying to remove. So as an example, you're going to say, what is it that I'm adjusting? I'm adjusting the uniform. For how much am I adjusting the uniform? For $52.20. Where is it that I'm moving this to? Well, my accountant told me actually that this should be my personal transaction, just as an example. So therefore, you're going to put it as a part of your shareholder distribution. Now, you're going to say, but that did not happen. How come now I have $110.40, right? So the reason why you have it is because accounting actually works on the double entry, right, of a debit and a credit. So if you actually debit something what you were supposed to credit, it's going to double amount that is sitting in here. So many of you are actually going to experience this. So it's not an end of the world. So you taking a credit from uniform and you placing it actually into debit of the shareholder, because the shareholder is really debiting that. Now this is going to disappear. It's going to be zero. But the uniform, as far as the name, will remain. And the reason why it's going to remain is because there is a financial transaction behind those journals. Now, did you have any other questions in regards to general journal or any other questions? Because I think we're moving towards 11 o'clock and some of you actually may going to need to leave. I don't mind to stay actually longer if you have questions.
Awesome. No, that's a great example. I see one question came in. Do you work with nonprofits?
We do work with the nonprofits. As a matter of fact, we do work actually currently, one of the newest clients actually is one of the schools. And the only reason why I remember that, because there was the most recent reviews they provided us, that was actually kind of very impressive. So yes, we do. And this is actually who they are. Let me see. That's them. They work with DePaul School. There you go.
Awesome. And then, you have a great comment here. It says, thank you. I appreciate all, Zoran, and I've enjoyed this class. So thank you very much for all that you do.
Of course. And remember, you can always call me. We do provide actually in here free consultation. I may not going to be as accessible over the phone because obviously, you know, I'm an accountant, so I have like many obligations in this office. But what I'm trying actually to tell you is that we do provide a free consultation. And yet, if you do identify yourself that you're with a women's business center, I will try to get back to you because I know that you're going to be still fresh and you want to get the answer kind of quick. So I'll do my best actually to do so.
And another question, is there a difference between QuickBooks and Intuit?
No, that's the product of Intuit. One of the products of Intuit actually is a QuickBooks, TurboTax, Lacert, you know, just to name few, they are products of, just like a Word, PowerPoint, you know, is a product of Microsoft. Windows is a product of Microsoft. That's how Intuit is a roof company for their respectful products, such as QuickBooks and those that I have just mentioned.
Great. As Zoran mentioned, he'll stay on for a few more minutes, answer any questions.
Sure.
Thank you all for your time today. The link and the phone number in the chat. We'll also follow up with an email. After today's session, you're actually going to have automatically a pop-up of a feedback form. So please take the time and fill that out. It helps us gauge if you understood today's session, if you enjoyed it, and what you want to hear from us in the future. So with that, thank you. And thank you, Zoran, very much. We look forward to seeing a lot of you next week. Tuesday morning, we'll do a little bit of a version of the online, and then we'll get into some of the tax questions you may have if any of you received that stimulus. So we'll touch base next week. And with that, yes, you are automatically signed up. You'll get a reminder email from me just like you did yesterday. So stay tuned. All right, thank you, everybody.
All right, well, everyone have a great rest of the day and look forward to talking to you next Tuesday. And thank you so much for attending this today.
Thank you.
All right, bye.